Hello, everyone. Welcome to today's panel, Understanding Asian Markets in 2020 and Beyond. 2020 is just being a record to human history. Now we're at the end of the year. Looking back, who would have expected it has so much going on? The natural disaster, the trade war, the tense between some countries, the drama with the US election. It feels like that we have entered this black swan nest, like constant surprises. And among which, the one affected us all would be the pandemic of COVID-19. It has deeply impacted the way of our living and work. So today we're here, gathered the thought leaders from our industry, from the brokerage side, fintech, PSP, consulting, and to have a chat about what had 2020 brought to us. I'm Leah Wang from Plug It, and I'm the moderator of this panel. Here we have four influencers for our today's discussion. Let's welcome Avner Ziv, the CEO of ZotaPay. Hello, Avner.
Hi,
And
hi
Gavin
there.
Mark, Chief Consultant from VP Business Solution.
Hi, Leah.
Hi, Mario. Gavin. Yes. And then we got Mario Singh, the founder of Fullerton Market.
Hi, everyone.
Hello. And Tom Higgins, the CEO of Godai.
Hi, everybody.
Welcome, Tom. Welcome, everyone. So now speaking of the impact to our work, this is actually one of the biggest change that happened, going virtual. Remote work, working from home, and reduce the physical presence, going digital. So the first topic we're going to discuss today is about the digitalization. So has the pandemic literacy, and can it affect online trading? Tom, you're from the technology side. Would you like to share your thought first?
Yes, absolutely. I think it's enormously improved digital literacy. And I was having a chat with my 95-year-old mother over Zoom yesterday, which I never thought would happen because she was not a tech person at all. I mean, computers, I don't think electricity existed when she was born. So yes, it's, and I think the fact that people have got used to sitting in front of a screen where it's incredibly easy to access digital services such as trading has changed things for good, permanently. We're all working from home at the moment because we're in a lockdown in the UK. But after the vaccines worked and everyone's now can go out again sometime next year, I still think there's going to be a significant amount of working from home 20-30% of the time, because we found that that's nice. What we've also found, and I don't know what the other panel members found on this one, is that some things you really can't do very well working from home. Strategic thinking, standing in front of a whiteboard, chewing the fat as it's called, is just really, I just find that really, really difficult to come up with ideas and challenge the management team on Zoom or on Teams. You just need to be able to walk around and look at people and write things down. So I think a really good hybrid mix will make that difference. But the effect, as your question you asked, the effect of more digital literacy has changed the industry, and we've seen a lot of our clients are saying that they're getting a lot more applications, a lot more onboarding of their own clients at home in front of a computer now. So I think that will be a long-lasting change, yes.
Mm-hmm. And how about Mario? Do you agree?
Yeah, I definitely agree with that. I mean, in terms of the acceleration of digital literacy, that has just exploded throughout the last few months. You know, I was giving a webinar recently, and it's so interesting. I shared this with the audience that I wanted to share with everyone. And I said, today, if you go online and you type the Ferrari, you type the word Ferrari, you'll see like 500 million searches, as an example, on Google. Yeah. But if you type the two keywords, right, like online trading, you get close to like 5 billion searches. So that those keywords have literally just surged, over the last few months. But one thing I do want to say is that there have been two effects from my view, right? Why that has surged. Two main reasons. Number one is obviously in the pandemic that all of us are in, stay-home measures, the social distancing, the safe distancing. By and large, everyone has got to be staying home. In fact, as we were chatting just now on the panel, there's so many countries like now facing like second lockdown, even in parts of Asia. So many parts of Asia are doing that. So because of stay-home measures, that's one key thing that has accelerated people driving into online trading. Even for people who have never been there or done that, now you're starting to see a whole slew of blue ocean people coming on board because of the fact that they're staying home. So that's the first reason. The second reason is because of what I would term as the central bank liquidity. Because of all of the lockdown and because economic, there's so much problems in a sense. Businesses are shutting down. It's affected the economy so much, right? There are central banks literally from Singapore all the way to the US have pumped in unprecedented liquidity, primarily to prop up the economies first. But in some way, shape, or form, that money has obviously ended up into the financial markets that has caused the gyration that we are seeing all these months. So these two twin effects combined, the stay-home measures and the central bank liquidity, has driven really a lot of people into online trading. Yeah. The other quick point I wanted to add is that I'm sure many of us have seen all these writing on the back of that. There's so many online gurus now. You've probably seen them on YouTube, on Facebook. They're just popping up all over the place. And for some reason, overnight, they became gurus in telling people how to trade well, how to invest well. One thing I really just want to mention is that this is where I think character comes in, because the very fact that these people are good marketers, if we don't find out deeper enough in terms of their background or credibility, what can then happen, a few more months down the road, our industry, the online trading industry, may potentially get a bad name because of all those who are just there to make a quick buck and not really helping people in terms of their online education or their digital literacy. Leah.
Interesting. So Gavin, you're from Asia as well. So what's your take on this?
One thing for sure is that there's a very quick digital transformation in this year. I have a similar scenario with Tom, is that my grandmom, who is like at the age of 90, and she don't know how to use smartphone. But there's some accident and she need to stay home. And we found out that very surprising. After a month of time, she learned how to use the smartphone, and she learned how to use WeChat to share video, and then she even learned how to learn English via the WeChat. So it's very surprising. There's no doubt that the whole world is changing very, very quickly towards digital. But one thing, if we're talking about our industry, I hope, all my foundation is more in China and Southeast Asia, and we do a lot of consulting with brokers who is doing real business in the region. And we found one thing is very interesting is that the digital transformation of doing the business with the brokerage business in Asia is not as fast as what we expected. Yes, people cannot meet face to face because there's a lockdown. First round, second round, third round, and we don't know when is the fourth and fifth round. And however, we expect that people would be moving everything to online, and the digital marketing automation would take a very huge effect and would come to the new ages in this year. But what we observe is not. People are still relying on especially in Asia, still relying on the IB business model. They just try to move things from offline to online, means from offline seminar to online webinar, to Zoom, to Team, whatever. In my point of view, it is not a kind of digital transformation. It's just a temporary way that people change their, because you still need to eat, right? You still need to survive. So they just change the way to broadcast the message to do the business. But fundamentally, their mindset is not that ready to move to digital. Yeah, it's just a temporary measure from what I see so far. But this is my personal opinion in regards to the digital transformation topic. And online trading, I think I think Mario is smiling a lot in this year. We experienced very good volume as a brokerage. We look back to what will happen in the first and second quarter. We know number tells everything. Definitely, the lockdown of the daily activity make people become nothing to do, and they need to go to online, search everything, go to Google and find whatever they want, and it boosts actually the online trading activity, especially in our industry. Yeah, thank you.
Good point. Okay. So Avner, how about you? What do you think?
Thank you, Leah. First of all, I agree with everyone, all the panel members. I totally agree with everything you said. I would like to add maybe two psychological things that happened in 2020. The first thing was the breakdown of the traditional banks, people who cannot go to their traditional bank anymore, and has to search or utilize online bank services. And now the competition is pretty free, and companies with better technology and better services might win the customer. And secondly, 2020 brought back to life the volatility in the markets, something that we really missed as online broker, as a retail trader. This is something in order for this business to run. That's basically the gasoline of this business. Without it, we don't see any much activity and the markets are dormant. I think 2020 brought back to life the passion, the ability to earn more risk, but also with smart trading, also strategies and technicalities, you are able now to also make profit. Obviously, it's a matter of education. And like Gavin said, I would say and estimate the Southeast Asian market, Asian market in general is more face-to-face, IB, educational type. And now it's a very big challenge how to engage with these people and to teach them. And one quick comment on Mario, it makes sense to me why Ferrari has only 500,000 searches now, assuming who is now riding his car, whether online trading, and I want to buy now oil or Google, Facebook, whether other shares, and mostly you will see the online brokerage there in the Google, in ad spaces, in the Facebook, in the social medias with the IBs or whatever, but they are much more in ground rather than the traditional banks who are lacking this experience.
Leo, something I just wanted to add. Something that we've seen is quite a large rise in mental health problems because of people being at home so much and because of people being away from their normal networks of people to support them. And it's something that sort of bubbles around under the covers that people don't really talk about. But once it starts coming up, there are a lot of issues. And if I think something we've already quite careful about is if people are starting to do more trading, and they are not really, they can't really afford it, or they don't really know what they're doing, there's a potential problem building up there for the future that we're going to have some people with some real issues, and the regulators are going to react badly against this, and there's going to be a serious negative knock-on effect, worse than they've already done. I mean, the ASIC have already just obviously come in and made some more changes again, but it's something that does worry me, is that this mental health problems are going unnoticed with people stuck inside. And I know from talking to our Shanghai office, where they were in their apartments, not allowed out for weeks, I don't know how they coped. I mean, we can go out for food, but I don't know how somebody in a one-bedroom flat coped for weeks not going out. It must have been appalling, absolutely appalling.
Definitely. That's a really fair point, because we need to indeed pay more attention to people's like mental health, indeed, during this special time. Okay, thanks, Tom. And then now let's dig a little bit more specific. So which instrument trading tools gained traction in the year 2020? Mario, you maybe have the first-hand experience with this. Would you like to share?
Yeah, sure. So I think there were no surprises in terms of the major instruments that actually went up. At the start of the year, it was more of the indexes. Yeah. So in fact, I'm sure everyone would have recalled probably late February to early April, during that period when stock markets were bleeding. They were in fact crashing, right? So I think many traders who understood what they were doing, many of them were going short in terms of the indexes. I particularly remember, I think it was March 10th, if I'm not mistaken, where the Dow actually plunged like 3,000 points, 2,997 to be exact. So I think indexes towards the start of the year, there was a period also where oil was being traded a lot. Right? There was a time on 20th April, I'm not sure if you guys recall, for the first time in history, oil futures went negative, man. Because they just had to dispose of all the oil. So I think during that period, naturally, oil was being traded. And then moving towards the later half of 2020, which is like now, leading up towards the US election that just recently concluded. It obviously there were a lot of trading on forex instruments, and particularly with the US crosses. So anything that had the US dollar on either side of it, I think there was a lot of activity in there. So particularly the major forex pairs, whether it was the euro dollar, the dollar yen, even the dollar Swiss, because there was a lot of safe haven flows moving here and there. So primarily it was these three main stuff. It was in the start, it was the indexes. It was bullion, naturally. Gold, everyone was piling in on gold. It was in August, I think, where gold peaked above 2,000 for the very first time. So indexes, gold, and then heavily in towards the US dollar towards the later half of the year.
You're muted, Leah.
Yes. So yes, I'd like to ask also about Tom, because what trend do you see? You may have more like analytical insight about this.
Well, I guess we see across a whole load of brokers, so we get a sort of higher level picture of everything. Probably the biggest area, because we were looking at an analytical model of all of the trading going across all our brokers, and I think gold was the largest amount that was traded by notional value across the year, by a long way. And then, like Mary was saying, it was the indexes were extremely popular at the beginning of the year. Cryptos, I mean, completely different size because they're so much smaller. But if you look at the interest, it's almost directly parallel to the price of the of Bitcoin. So as Bitcoin sort of got up to 10K, got more interesting, and now it's up to 15K. There's a significant amount of interest in it. I'm never quite sure where it's going to go or how much manipulation there is behind it. I'm sure.
Make a call, Tom. 100,000. No,
there was a call that if Trump didn't get elected, it was going to go to 200,000, and surprisingly enough, it was wrong. It always seems to be a bit like those people who predict the end of the world, and they always have a reason why the world didn't actually end. So no, I think it's going to bumble around this level. I think it only goes up, to be honest, because people manipulate it. Because when half of it's owned by a few people, I think it's quite easy to manipulate, and it's such a small asset class. But it's interesting actually, and it's the sort of, and I think this is very particular to very important for Asia as well, is the technology behind the cryptocurrencies is really the important thing. Bitcoin itself, I think, is like the car with the red flag. It's just the first one, and it's got lots of problems and lots of issues. It's not the future for cryptocurrency trading. It just happens to be the first one with the liquidity in it. But the technology behind it, the digitization of assets, now that's really interesting, of what's happening in China with the digital asset that's being released, and other places around the world. So that's something I think that we will see more of, and I saw this year. Again, on which other products were traded. Miners not so much, but majors, yes, very much so. Majors traded as the election, the soap opera that is the election that's still going on.
I see. And Gavin, do you have anything to add regarding this?
I think from the broker side, I mean, from Mario, from Tom, they have way better insight than us, because they really have the first-hand data about what is the best instrument and trading tools in the market in 2020. And obviously the answer is gold, gold, and gold.
Yeah.
That is what I observe.
All right.
I wanted to add,
Leah, sure.
about what Tom said in regards to the crypto and Bitcoin. We would assume to see, and some people would believe that in such crisis and pandemic, people will tend to go and buy, instead of money, other assets such as gold or Bitcoin. What we've seen that this pandemic actually affected the workforce, the manufacturing force, the ability into import products, and actually money was not a part of the game here. So people did not go from assets, despite the market was volatile, into Bitcoin and crypto. So this is something that people has predicted that would happen. Issue with any country like Iran, Nicaragua, or any other country that has a specific issue within their currency, we can see a spike in Bitcoin towards the people, the citizens over there. But when we see a pandemic on a global level, we were expected to see much higher usage of Bitcoin. But I believe because money was not, you couldn't even go to the store to buy with your money, let alone cryptocurrency. So there was not a lot of demand. Having said that, we see in the past 2 or 3 months, US giants and some laws that they allow in the US, like Square Up or other private companies that suddenly buy crypto or releasing $1 billion crypto within the market and even not in the OTC, something that really made the Bitcoin as a mainstream. We see more and more people, vendors are willing to accept Bitcoin as a part of their currencies. And so in that essence, I would say there is a little bit more flexibility, a little bit more usage in the traditional mainstream vendors or merchants nowadays in the past 2 months.
But about 10% of our revenue is paid in cryptocurrencies now, which I was quite surprised. And over 2020 that increased. So that's from Bitcoin and Tether are the 2 main ones that are used. But I was quite surprised at the increase. We've made it available to people and people just started wanting to use it. So I was a little surprised on that.
Interesting point. So yeah, as we're talking about this Bitcoin or crypto, we cannot really avoid this regulation topic. So what are the key regulatory developments right now is going on? Maybe Avner, you have a lot to share regarding this.
Yes, thank you. So I would like to emphasize maybe and concentrate, focus in China, because it's very interesting what's going on there with Yuan recently. And it's a part of a bigger movement, a bigger trend that's going on in China. China government right now is increasing and tightening the restrictions and monitoring and basically applying the monitoring system, the credit system on their citizens. And by understanding that any movement, any action, financial action for the users, for the citizens, and will be given credit and scoring based on that. It means that people, citizens will be able to, with higher scores, meaning low risk, people will be able to do higher limit transactions, will have access to better services, even education, housing, and so on. And what we see that even the Chinese government has launched the digital yuan and trying to block or limit the usage of cash in the country. So movements to the traditional wallets like Alipay or WeChat, which is already existing. But if you go now to a taxi driver or in the market in China, you almost won't be able to pay with cash. So everything comes as a part of a bigger system to be able to monitor and control every financial transactions of every citizen related to this person and score it accordingly. So if we're talking about online brokers or foreign brokers, which is associated with a higher risk in the eyes of the Chinese government, so traders that are monitored will get less scoring or will be marked as higher risk users, and their transactions or transfers might be blocked. Their websites that they are trying to do might be not supported, and so on. So these are, I think, the biggest challenge today in China, moving into digital yuan, stable coin, and basically come up with their own blockchain to answer the rest of the world blockchain, which they cannot control simply.
Gavin, do you have any experience about this digital yuan, or what do you think?
Personally, I would never use the digital yuan because we already have Alipay, we have everything, and I prefer to use the USD Tether instead of digital yuan if I want to use cryptocurrency. And yeah, if I mean, I really like this topic about the regulatory development. I mean, from my experience in Asia, we seldom talk about regulation about this industry because it's merely what the people are looking at when they're doing the business. And I assume that for Tom, I mean, he just raised out a very interesting phenomenon is that his revenue 10% is coming from crypto, and I assume that most of them are coming from Asia. Am I correct?
Yes.
yeah, because as we said, that the launch of digital yuan actually is a new means of control about cash inflow and outflow in and from China, and it greatly decreased the it increased the challenge for moving any into US dollar or any other free currency, and as such. We found that in this year, especially in China, about the regulatory issues, we found it much harder to work on payment. We found that the payment cost is getting higher and higher. I'm sure Software is going to increase the fee very soon. That is what I supposed to be, and people are trying to move away from, especially in our industry, they are trying to move away from keeping their book in renminbi or US dollar, but they move their book to USDT. And obviously, this is, I'm not sure it is right or wrong. It is, I mean, because there's some risk behind USDT. Speaking of the digital currency itself. Yeah, this is what happened in China. But this year, as what I've said, I mean, the internet censoring is getting more serious in China. A lot of big brokerage website, their domain, their IP is blocked. They need to change the domain. Their payment is getting. I mean, they just think of a lot of fancy way to. Make the business continue because the demand is still there. The people who want to invest, they still need to find a way to invest.
I want to chime in real quick on this. We've been talking about regulatory, and with the zero in on China. I'm sure many of we would have seen this right in the past week, where the N group failed to list, and at the end of the day, right, is exactly what we're talking about. These two keywords called capital control. That was something I was looking at actually very, very closely. Can you imagine they're raising like 34 billion, which is the largest in history. Saudi Arabia Aramco, the oil giant. So N Group was bigger than that, in terms of the money they raised. And yet when they were called into the meeting, right, with the regulators, from the securities regulator, even the Forex regulator, and I wanted to try and find out as much information as I can about what exactly happened there. I mean, at the end of the day, it is really about capital controls, to see that this giant themselves, I mean, Alibaba and all their companies. If you look at Alipay, which has over 700 million users that transact over a mind-boggling, I think like $17 trillion, which is mind-boggling. So at the end of the day, part of the reason, as Abe mentioned, when they talk about the digital yuan, at the end of the day, is capital control. And if you want to look at it in even a stricter one word, it's about control at the end of the day.
Yeah, it's sort of opposite to what cryptocurrencies were invented for, wasn't it? Was to give power to the people to be able to. Yeah, it's very much like 1984, where Big Brother is definitely watching you and wants to control everything that you're going to do. So, because I mean, if you just look at a Tether, when we get paid in Tether, I get an email saying we've made you the transaction, and immediately in our account, we use Bitfinex actually, and immediately I get flagged up. It's there. I can turn it into dollars, and within a few minutes, it's in my bank account. It's so incredibly efficient way of moving stuff around, but the governments in the world don't like the fact that it's too easy, do they?
Yeah, I must add to Gavin that we can see totally the Chinese government trying to crack down many internet activities, as well as online brokers, foreign brokers. It might be related to cryptocurrency or not, just because there are retail brokers and still a part of the control is moving funds in and out of China. This is something that the Chinese government would like to block and don't really like. And we see the challenges that the Chinese censorship has blocked TLS 1.3, which is the most advanced transmission system, the HTTPS, basically. due to the fact that in the West world, we have the privacy policy, the user privacy. We can block even with TLS 1.3, the website, the actual website, the domain that the user is coming from. And this is something that the Chinese government did not like. We saw a month and a half ago that the Chinese blocked TLS 1.3, and that was a very big challenge in terms of Western brokers that use the highest security standards, currently now to switch back due to the same censorship, controlling system, rank or credit the citizens and see which website that they're actually browsing right now on. And what we had to do in ZotaPay is basically to transmit and broadcast all of our Chinese traffic under the ICP license, inter-provided license within China, in order to bypass these issues. And obviously now it's much better experience, much faster. But I would say that for Western companies to try with their current infrastructure to broadcast into China and try to target Chinese users, it's very challenging. Mm-hmm. Nevertheless, what Gavin said about the government or the banking system crackdown. So we had up until 2 years ago, the UnionPay, the China UnionPay, as an active, valid solution for retail brokers, which was stopped and seized a while ago. We saw the market is moving to P2C and P2P, person to person. And also this, right now, we see struggling with payments. Obviously, everything is possible, but more and more providers are moving to usage with USDT, as Gavin said. And I see, and I think the future of the payments is moving towards that. I'm not sure if it's the right thing or not, again, but we do see more and more providers. The monitoring on the banking system, the number of transactions, where the provinces it is allowed, only the 4 big banks. So a lot of things change in China in terms of payments, what it is allowed and what's not, what's monitored and what's not. And I think 2020 was a very big change just to adapt, understand what are the new rules, what the regime is aiming for, and how to conduct the business in China. V2 is also a very challenging thing that we are looking forward to see what's going to happen in 2021, but definitely changes are happening there.
It actually, it's not only about the payment restrictions. I think what you've mentioned about the technology infrastructure, difficulties, they are true as well. Tom, GoDai is a very popular provider in APAC region, also in China. So did you hear any feedback from your clients regarding this, the technology constraints?
Well, there's always constraints getting through the Great Firewall. That's always an issue, and you have an ICP license as well, and it's quite difficult getting that and maintaining that. So a lot of people are operating around that. So yes, that's an issue, and we find probably not so many brokers inside China are opening up now. They tend to be opening up in lots of other Asian countries because it's just so much easier. Something that I think will accelerate that is ASIC's changes. So I predicted in November last year that ASIC were going to do exactly the same as ESMA. All of the Aussie brokers told me that this was rubbish. Of course, they weren't going to. They'd look after their brokers, but I don't think regulators work like that. Regulators like to do like other regulators because otherwise they're seen as, they think they're weak. They've done pretty much the same as ESMA did, reduced the leverage to a much lower level at 1 to 30. And it can be interesting to see what's going to happen. I suspect that they're going to try and push business offshore, but ASIC have said that if you do that, you won't be able to keep your ASIC license. So are we going to see lots of brokers leaving ASIC and operating under other regulatory regimes or non-regulated? I suspect so. I suspect we're going to see a great deal of rise in business, and that's not going to go to Europe. That's going to go to other Asian countries. And I do think Singapore is going to be a big beneficiary in a lot of this business because of the complications in Hong Kong of what's going on with the Chinese government and it gradually moving back into more core China. I mean, Gavin's an expert in this area, but I see people doing more and more in Singapore and Malaysia and around there.
You know, this is where the issue comes up. Let me share with you from the perspective whereby Tom is absolutely right when he talks about the low leverage. If you look at what's been happening throughout the regulatory developments, it's taking the cue from ESMA when ESMA came in and decimated so many things. Leverage for one key thing has obviously dropped, right? Even if you look at Singapore right now, Singapore's leverage for the foreign exchange industry at least has dropped. It used to be 1:50, and now it's 1:20. So this where it kind of juxtaposes the scenario, okay? I don't think the governments are wrong. The regulators are obviously not wrong in terms of protecting the retail client. Naturally, they are trying to say, okay, because we've got to come in to do the regulation. We've got to drop the amount of leverage. But in the same sense, right, the retail clients, which is primarily where some brokers are obviously marketing to them, and they are the ones that naturally want the bigger leverage. They want, oh, give me a leverage of 100:1 or 500:1. I have to run my EAs on a higher leverage. So I think this is where the walk has to happen, the delicate balance between, okay, so how do you appease the regulator on one side in terms of them having lower regulation? Because that is the jurisdiction. If you want to walk in that specific space, then naturally you've got to offer lower leverage to your clients. But at the same time, the retail clients, right, which is the bulk of where most brokers are applying their trade, they are facing clients who actually want a higher regulation, a higher form of leverage. And this is really the interesting part, guys, just to frame it up from what the things that I'm seeing. Many traders, investors, many clients at the end of the day, right, they naturally say, yes, I'm going to pivot the business towards somebody who has a regulatory, a bona fide license in any of these specific jurisdictions, so to speak. But when push comes to shove, the things that we are seeing is that they don't automatically want to open up accounts in those jurisdictions simply because they know they are being hampered by those leverage rules. So they would rather tend to go to either an offshore broker or things like that, where they're a bit more flexible in terms of the whole array of things that they can give, whether it's in terms of trading contests, whether it's in terms of credit bonuses, or whether it's in terms of slightly higher leverage. And that is really the kind of mandate for clients in Southeast Asia and maybe Asia Pacific as a whole.
I totally agree with you, Mario, that just sorry to interrupt. I just want to add one point is that I feel that at this moment, there's lack of a balance between the client expectation and the regulator's action. And in some sense, which is pretty sad to me, is that it actually fill up the scams and Ponzi scheme in the industry as well, because always come in and promise that we are partnered with blah blah blah, and we can offer terms leverage which the other broker cannot do it for you. We offer, due to this leverage, we can offer much better return on investment for you, etc. And we actually, from what I see in the Asia market, especially in this year, the Ponzi scheme activity is actually, we call it money game now in Asia. The Ponzi scheme activity is actually doing better, way better than what it was in the last 2 years.
Sure.
So if I'm the regulator, we really need to come in to see the actual situation in the market when they are doing something. Is it actually helping to protect the investor, or vice versa?
With that, man.
Because when the NFA made all of their regulatory changes to basically shut down FX in the States, they didn't really protect the investors. They just pushed it offshore so that they couldn't touch it anymore. It was just like, not in our backyard, but it still happens. So they're just pushing it around somewhere else sometimes, aren't they?
So now we come to the last question, and also one of the audience would care most, would like to know most, is actually, what is Asia's market share for the largest brokers, and will it change? So Gavin, what do you see from this?
I will look down it into more in details, break down Asia into mainly two parts. Let's ignore Japan. We will break down into China and Southeast Asia. I guess that is how most of a broker would define it. If you talk about the Asia share, definitely in the global perspective, the whole Asia market is getting a bigger and bigger portion. But however, specifically, we see that Southeast Asia this year, start last year, is getting a booming increase, especially in places like Vietnam. Thailand was mature back 2 years ago. Malaysia is more or less the same, but we see that in general speaking, there's a very big booming market in Vietnam, and also due to the crackdown of China, we can see that actually some of the industry players are leaving China, or they become very inactive in China, and they all rush into Southeast Asia to fill back the gap of the revenue. So if you ask me, my observation, the Asia, most of the big brokers, I mean, they all focus on growing up the demand in Southeast Asia, and definitely there in Southeast Asia, the volume is getting higher and higher, and it significantly would, would become a significant revenue for most of the brokers.
And Mario, do you see the same?
Yeah, I mean, I'll give that a resounding yes as well. I think Gavin put it very succinctly in terms of splitting the two geographical regions. So China being on one side and Southeast Asia. I want to dive slightly deeper into the Southeast Asian side of things, because that's where we primarily are well known, the company Fullerton markets as well. So let me frame it up from this perspective, right? If you look at Southeast Asia, the 10 countries that's in Southeast Asia, 620 or 30 million people, okay? 4 countries specifically account for half of that population. So that's going to be countries like Malaysia, the Philippines, Thailand, and Vietnam. Specifically these 4, which I dare say that some of the better known brokers, we being included in that, are kind of like plying our trade, right? And then you have the last frontier, which are the 3 countries of, say, Myanmar, Laos, and Cambodia, that collectively add in another, say, 75 million population, these 3 countries. Here's the key thing. The way to win the game, to increase market share in Asia, really depends on a couple of key factors. Number 1, local knowledge. Number 2, trust. So let me just go slightly deeper into what I mean by, say, local knowledge, right? I'll never forget the day there was, I think it was a CNBC interview where Anthony Tan, the founder of Grab, right? The reason why they kind of like won the game from Uber in this part of the world was really 2 things, the 2 words called local knowledge. So similarly, applying the trade in Southeast Asia, I mean, everybody wants a piece of the pie, but how much do we really understand the local culture? You know, even to the things that they eat or the things that they trade. So let me give you an example, right? So let's just say countries like Vietnam, Thailand, well, they love to trade gold, okay? If you look at countries like, say, Philippines and Cambodia, they like trading the US indexes. So literally tailoring that kind of flavor to then penetrate into the market, I think is profoundly important, right? So that's where I think local knowledge comes in. Number 2, and I think I would speak for literally every broker here, I think it's so important to gain this word called trust. You know, trust at the end of the day is literally the basic building block of any major institution. You lose that trust, you lose everything. You know, in fact, if you look at the last currency crisis, in a sense, or if you look at the last global financial crisis, it wasn't a currency crisis, it was a character crisis. You lose trust with people, and that's it. And I think Southeast Asia, particularly, is so important, because once you lose it, you're just gonna fast forward back, all right, or rewind back all the years of what you've been trying to do. So I think getting your feet wet, understanding the local culture, and I think that is so important. Building relationships on the ground, and which is, you know, with the entire pandemic that has been going on, everything has been moved online. Vietnam, I'll give you as an example that Gavin was talking about. 95 million people, right? Pacific, well, at least I wouldn't say the entire nation, but from what I know from my people on the ground in Vietnam, they don't quite like the online gatherings. Vietnam is a place specifically, although everyone has pivoted online, they still prefer the offline kind of gatherings, you know. So when COVID was sweeping throughout Asia, Vietnam was a little bit quiet in terms of although it still remains a huge market share for us in our company. But then we realized they just offline meetings. So that again reinforces the fact about local knowledge. So the 2 key things I want to say, it is an absolute thundering yes that market share in Asia will grow. I think it's so key that we have to understand 2 factors. Number 1, local knowledge, and number 2, trust. And that goes in terms of building relationships with people on the ground.
Indeed, very accurate summarize, actually. So Avner, do you have anything to add about this?
Yes, I totally agree. that we see many brokers, retail brokers that are shifting, coming out of China and moving towards the Southeast Asia and other regions in general. But we see premium brokers that used to traditionally work for dozens of years, tens of years in China, locally with the men on the ground, are now shutting down their offices and moving other regions. I would say that in Southeast Asia already you can see a presence, very big presence of the main retail brokers already, both locally, like Mario Fullerton with very deep base on the ground, but also some international brokers and groups, European groups with multiple licenses that already entered these markets a while ago. And now it's going to be a different ball game because the markets are going to have and experience more competition. Regulators in these countries are more active recently, especially in Vietnam, in Thailand, Malaysia, whether they issue letters or proactively doing some actions against the brokers. And we see more involvement of the regulators in these regions. And as Mario said, we also see the increase in Laos, Cambodia, Myanmar, in these regions. And actually we support Mario and his team with these regions. So we see more shift towards also the smaller countries within the regions that now actually became open, like access to internet, the POC distribution over there, the point of sale is very small, meaning the credit card, even if they have it, they don't use it. So online bank transfer, e-wallets that we didn't see a while ago, QR code, new ones. So these new payment solutions allows us to reach this marketplace, even with the time of pandemic and changes. So it's very accessible currently.
Okay, thank you, Avner. Right, I believe there are a lot to discuss for this kind of topic. And well, due to the time limitation, our discussion will finish here today, but we will for sure continue our discussion offline and after this panel. Then, thanks everyone for the wonderful discussion, and thank you for sharing your experience and the insights. So I guess we will stop from here and wish everybody a good health of 2020, a fruitful end of the year, and all the best for 2021. Thank you. Thank you, everybody. Thank you.
Everybody, thank you so much. Great.
Have a good day.
Bye.
Great day.
Thank you.
Bye bye.